Here to discuss, as part of our daily segment highlighting the very best of Bloomberg Intelligence, Paula Penkal, who covers the chip sector. Fascinating story, because we sort of understood that Nvidia got some sort of authorization from the US government, but clearly not enough to help its revenue overall.
Correct. So essentially what's happening is there's a ban on these chips to China because they're very complex and they feed into the hyperscale data centers and could potentially be used in military end uses. So it's a ban, but they're allowing certain chips to go through to fulfill orders for US clients.
What are the odds that you think this looks like a full ban, a partial ban? Does it fully go into effect? How are you thinking about ways Nvidia could possibly get around this?
I'm not sure how they get around it, in the sense that I personally think the business goes away, at least near term. And they're talking about $400 million of potential losses on the top line for the third quarter. Now, if you annualize that for a full year, that's 27% of their revenue base. And that's why the stock is taking such a beating today. And also, like, Nvidia has always traded so high. They've traded at a premium compared to other players. I mean, they're just, the golden child, if you will. And so they've really, really taken a nosedive on the trading.
Does that mean they have further to fall relative to other peers, or what does this mean for the broader sector at large?
Well, I still think, Nvidia is a great company. They have great product. And I think it's just a matter of shifting away from the Chinese customers and sort of recouping that lost revenue. And we really don't know where the geopolitical issues are going to take us, right? So it may not be permanent, but I will tell you, the next couple of quarters could very well be tough for Nvidia. And relative to the broader market, it's a good company, and it deserves to trade at a premium to maybe an AMD and Intel, just given their cash flow, their free cash flow, and their growth trajectory historically.
In terms of dependence on China, is Nvidia the most exposed? Are we going to see a dial back, sort of front running some of this from other peers? And in general, as you say, that if you annualize this, they're going to be just cutting off their own particular part of this market, Nvidia. What about other players? Yeah,
well, I do think that the bans could spill over into different areas. But when it comes to exposure to China, Nvidia, AMD are similarly exposed on a revenue basis. Intel, less so. But when it comes to manufacturing facilities and the back-end test and assembly and packaging part of the semiconductor supply chain and process, if you will, they're all really highly exposed. So it'll be interesting to see how it plays out.
Well, to the extent that some of its benefits, you mentioned free cash flow, this is going to really impact the top line, revenue, future revenue. So some of the benefits that have made Nvidia golden child here, do you see some of that eroding given the changes we're seeing now?
Absolutely. And that is why we're seeing the stock trade off. I mean, it's down 58% year to date relative to an AMD, which might be, 40 something. So the answer is yes. I mean, this is going to eat into some of their cash flow, but they're still generating $7 billion or something like that of free cash flow for the year. And so the valuation will come down as well.